Welcome to Share Views with my co-host Stefania Barbaglio, who's from Cassiopeia Services, and with our guest, who's Patrick Birley, CEO of ISDX.
Still ISDX.
Still hanging on in there?
Just about. Soon to be NEX Exchange. So.
Right, NEX Exchange, okay. My first question, which is the crux of the matter, I think. If you're a property investor, it's supposed to be location, location, location. If you're a stock market investor, liquidity, liquidity, liquidity.
Oh,
it took me ages to come up with that, so please,
Well, I disagree. I disagree with it fundamentally, actually. I think that, yes, liquidity is important, but it's not all about liquidity. And we have a number of companies on our platform who are frankly not that interested in the liquidity. People come to public markets for different reasons, and it's not always for liquidity. And if you're a £20 million or a £40 million company, let's be honest, you're not going to have daily trades in your stock. And for some companies, that's absolutely fine. A public market is there to help them establish a price in their stock. Whether it trades at that price or trades regularly at that price is not the absolute crux. I think that some exchanges have really been pushing the liquidity issue too hard, because that's how they make revenue. And so it's in their interests to see lots of liquidity. It might not always be in the interests of the company to see constant liquidity all the time.
Well, that's a fair point, but as I'm a champion of the private investor, the punter,
sure.
For me, if I'm, I've got my I want to invest 500 quid in the next Facebook or the next
Sure.
whatever it is on ISDX, I want to be able to get in,
Yeah.
which I can do, and get out, 3 months later or 3 weeks later or 3 days later easily, and that's what drives the whole machine. Well, so that's the liquidity part that I'm talking about.
Yeah, and I think that if you are searching for the next Facebook, you won't be looking to invest £500 now and get out in 3 months' time, because if you are, you're probably in the wrong game. If you are an investor, and in these small cap stocks, one expects to see investors who are going to be in there for quite some time. And so, I think that if you are a punter, as you say, we're not the market for you. If you are an investor, we have some very interesting stocks on our market, and a growing number of them. And you can get a fair price in the market to get in and to get out. But if you're only going to be there for a few days or a few weeks or a few months, it's probably not for you to be in our market. This is about investment in interesting companies. That's what we offer.
And Patrick, from a company point of view, what are the benefits to come on ISDX rather than AIM or a main listing?
It's a good question. And I suppose when I talk about what's the reason for coming onto us, the first reason is not about the differences, it's about the similarities. We are exactly the same. From a regulation point of view, from a tax point of view, from a trading mechanism point of view, we are identical to AIM and the alternatives. What ISDX offers from a company's point of view is firstly a much more engaged service. We're a small team of people very involved with the issuers and understanding what they want out of their involvement in the exchange. It's not come and apply and use our model. What you want might be different, and we're able to work with companies on that. Secondly, and importantly, we're hugely cheaper. Coming onto the market will probably be something around 25% of the cost of if you were going to the alternative. Now, for a small cap company, if you're getting exactly the same product, but you're getting it at a quarter of the price, then that has to be interesting, and it's something that we really should be, emphasising more and more. And it's not just about when they come onto the market. It's about the annual costs of staying on the market will be much lower on ISDX or on NEX Exchange shortly than they are on the alternatives.
So regarding this fundamental change in your business, would you like to tell us a little bit more about what is going to happen? What is your strategy?
Yeah. Well, just, quickly, the first thing is that we are changing from ISDX to NEX Exchange. Our owner, ICAP, is splitting into 2 parts, and we're part of the bit that won't retain the name, so the electronic markets and the post-trade services businesses and ourselves. And so we will become NEX Exchange, which, I recognise it's a rebranding of a story which has been going for many years.
It's just a different name. It's just had more incarnations than Doctor Who, or James Bond maybe. But what is?
It's still a quality thing at the end of the day.
What's going to be the main difference for apart from the new name?
Well, I think the key difference is that we're going to be much more out there. We've been doing a lot of work in the background to make sure that the trading facilities are working properly, to make sure that our rule books are simplified, to make sure that our relationships with the corporate advisor community, the end issuers, the end investors are improved. And so it will be about applying a lot more aggression, a lot more of a push in terms of what is the service that we're offering and how can you use it successfully if you're an issuer or if you're an investor.
Well, that's the thing. It seems to be great if you're an issuer. If I want to set up ZAC PLC and float it on the stock exchange, you know, you're the person to go to. But I'm still not convinced that, you know, there's the NASDAQ, there's the LSE, there's all these places which are, you know, hot platforms.
Sure.
Isn't that what you're going to try and do yourself?
Well, if your only obsession is about liquidity, yes. But if you're a £20 million or a 40 million or £100 million company, you're not going to get much trading on NASDAQ. You're not going to get much trading on the LSE, and you're not going to get that much trading on us either. On all of those platforms, you will have the same thing, which you will have a bid price and an offer price. And depending on how much liquidity you want and those around you want, there will be either more activity or less. For many of the companies coming onto our platform, liquidity is not the absolute end objective.
But isn't it also the visibility? I mean, for instance, you know, I'm looking at the London South East website to see.
Yes.
You know, I'm a punter. I mean, I'm a gambler,
Yes.
and I'm looking to see what's, you know, cloud tags up 50% and so and so's down 30% and everything else. That, you know, that stimulates me, and I go and I pick up the phone or I click on the mouse and I buy the shares. I mean, that's still got to be a factor there. I mean,
well, it's certainly a factor, and there are, through some of the brokers, you can click on the mouse and do the ISDX trades. You certainly will see our data on London South East, as you will on all of most of the other vendors. And an increasing number of the brokers allow you to click and trade on ISDX as well. So, you know, that's a growing trend. But again, you know, I just come back to this thing. If you know, if something's going up 50% today, it's probably not going to be on our market. You know, we are about long-term growth companies. You know, I don't think you're going to see those types of jump shift changes in prices on our products.
So do you have also company, they just started, or they are looking then to move to AIM, so or maybe to the main market? So like for them, ISDX would be the best opportunity to get visibility and transparency to investors?
Again, you know, we have so many different companies who are coming to market for very different reasons. And yes, you do have some who are on a journey to another place, but we're not a stepping stone. We think that we can grow with companies, and we have companies who have been with us since the very beginning of our previous incarnations. You know, Shep and Neame, the UK's oldest brewery, is a £200 million company, extremely successful, has been a long-term company on our market. It's never raised cash through the market, but it's a visible price mechanism. It trades every day. You know, they are very comfortable with the level of service that they're getting, and they're a good example. We get young, dynamic companies coming on who are on a growth path, and if they can't raise more money, if they can't raise money with us, they might have to go elsewhere. But actually, they're finding, some of them, that they are able to raise the money that they want. So, you know, there are a variety of reasons for a company coming onto a public market. It's not just about liquidity. It is about what are the company's objectives? How are they working with their shareholders to make sure that their shareholders are getting good value, and are able to exit the shares or enter the shares if they want to?
What about the regulatory side? Because part of the cost of AIM and the fact that, you know, just it's a bit top heavy for some companies is that the regulatory costs and just the other costs. How safe and how sort of solid is the ISDX or the NEX area going to be?
Well, we are, from a regulatory point of view, we are exactly the same as AIM. We are a growth market. We operate under a rule book which is governed and set by the FCA in terms of the way that we operate. You know, but so we are. There is no difference in terms of the processes that we apply to a company. We might interpret one or two things slightly differently to the AIM regulation team, but again, we will engage with the advisors, engage with the end company, and look at how, what the issues are that they have which might preclude them from the market. If they have those issues, we will try and find ways to overcome them. Some may not be able to be overcome.
So we are cheaper without actually there being less safety, let's
absolutely.
say.
We have
discount airline or something like that, the EasyJet versus the British Airways.
Well, even if it is, we both have the same safety regulations in place,
right.
And that's the absolutely key thing. And we are very tightly controlled by the FCA, have a very good engagement with them. They look at us very carefully, and we are. That is our absolutely critical to us, is to be there and to be safe.
So if I am looking to list on the NEX Exchange, it's cheaper, but I'm just saving money. There's no other negative.
The only thing that, yes, you are saving money, and you're getting a much more personal service. You're getting engaged directly with the exchange on a number of levels, and we hold investor events, and we hold, again, it depends on what you want as a company and what your shareholders want, and we will work with you to achieve those aims.
So that deadly word boutique comes into it.
Oh my goodness. I think that we are...
Boutique exchange.
No, I don't think we're a boutique exchange. I think that we are a full-service exchange who have, we have 85 companies there at the moment. It's a growing number of companies, and I recognise that it's not a huge number, but there's some really interesting companies on the exchange, and some more coming. We've just had our first real estate REIT, real estate investment trust, coming onto the market, and there's a product that they are very, very cost sensitive as a REIT. And so the difference between coming onto us and going onto an alternative market was the difference between that REIT being able to be successful and not be successful. So clever management thought about how to make it work, came to the cheaper place that has the same regulatory structure, has the same tax benefits, has all of those other positives, but it's just cheaper and easier to operate.
And Patrick, what would be your message to investors? So if you have to say why I should look at ISDX rather than another market, what I'm going to...
Well, I wouldn't say look at us rather than another market. I would say look at us as well as another market. As an investor, it shouldn't be any significant difference. If you go to your broker and you want to trade Chapel Down shares, and you believe in the Chapel Down story, then Chapel Down is quoted on ISDX, not on AIM. So go to your broker and trade it in exactly the same way as you would as it sat on any other platform. So there is, from an investor point of view, we are hopefully bringing good companies to market, companies where their management are clearly conscious of costs. And I think that in any small and medium enterprise is an important factor. Have a look at the shares there. And if you like the story and believe in the company, then get involved. But as with any small cap market, you have to be careful. You have to do your research. Make sure it's a company that you believe in. Make sure that you understand what the risks are, and get involved. But I would say, be cautious. If you are a guy looking to punt and get 50% tomorrow, chances are you won't get it on an ISDX stock.
The other thing, just to finish off on maybe a more joyous note. AIM came of age, let's say, because you had the ASOS on there, which started off at 10p
sure.
and became £50 and stuff like that. It's having a few big winners is it's not going to do any damage, is it?
No, we would be delighted with that. And I think we have some extraordinary stories on the exchange already, and I think that we will have more coming soon. So, keep watching us. Don't give up on us. I think that there's a really exciting story brewing, and we're enjoying. We're going to have a good year coming up.
Patrick Birley, CEO at ISDX, and soon to be at the NEX Exchange. Thanks for coming in today.
Thank you.